All right, welcome everyone to Mackey's Retail Roundup Live. I am Spencer Israel from Stock Market TV. That is Jeff Mackey from Mackey's Retail Roundup. Jeff, let's get into it. You ready?
Sure,
All right, let's
sure.
go. We're talking retail. We're talking economic data. Let's get a little wonky here. So this first chart, you're saying that stocks are stuck in
Oh, there we go.
quicksand.
Okay. Yeah. I mean, yeah, it's kind of a graphical representation. We can't get above the old highs. We're talking about this as being resistance, and that's kind of where we are. Anytime the stock market gets going, it's going to find a reason to go lower. And what's interesting about that to me is well, a couple of different things. This is the XRP. You can see we kind of failed at right where we sort of should have, at that end of February, and it's been a straight shot down. Now, on the upside, we didn't break down completely, right? It's kind of a lot to break, not just collapse when the whole Iran thing happens. That knee jerk reactions generally sell. That seems bad. We'll get into whether or not the crude, but crude going up 20% for sure not good, and it speaks to a certain tension. But the market's still in a range. Now, basing here really wouldn't be the worst thing on earth. It wouldn't be the worst problem we could possibly have, but it's not great. And it bodes for just kind of a summer where we're going to be facing headlines. It's clearly crazy in town, and it's not going anywhere for another 3.5 years. So we're just going to have to kind of ride out some of the headline risk and move on with our lives, But it's in terms of if you rank the market overall, B plus. It's the scare stories aren't really working anymore. That's the flip side of neither are we've got this red hot trade deal in my hand, and all I have to do is show it to you, and you guys won't believe how amazing this trade deal is. Like the Wall Street just kind of calling BS on both those. So you end up with it. It's not like last summer where the yen was just completely falling apart. That relationship was collapsing. But summers tend to find a way of being exogenous shock things dating back to, they downgraded our credit in 2011. Last year was kind of a train wreck. It seemed like a disaster. We'll find a reason for the news to get bad before we discover again once earnings roll around that the consumer showed up and,
The
and
market
spent
the
recklessly.
market likes to pick a narrative and obsess about that for a little while. So is it fair to say, Jeff, that we have moved on from the maybe not entirely moved on, but somewhat moved on from the trade war stuff, from the need to have concrete deals, and now there's more violence happening in the Middle East, and we care about that. And so, is it fair to say that the trade war stuff, while it still matters, maybe doesn't matter as much today as it did 6 weeks ago, 8 weeks ago?
Yeah, there's an old movie reference, and you kids probably have never seen it, but they just wag the crap out of the dog. They're wagging the dogs when you come up with kind of a distraction that gets the country's mind off what's going on. And man, getting involved with some nuke potential scenarios with Israel and Iran, that sure took the mind off the tariffs. That got us thinking about other things. So yeah, we've moved on from that. July 9th is just sitting out there, man, like the sword of Damocles. And under normal circumstances, you would think, okay, they're not just going to jam shut the entire kind of trade supply chain. Like that was not a real thing. And that's really the way the market's betting cautiously. We're going to get into what's working right and what's not right now. And it is a little selective, based on some of the data we've seen. And at least that's the MacGuffin for why they're saying it's happening. But for the most part, we have balanced out a little bit of that tariff risk. Now watch for that to tick up in the next month or so, because again, it's July 9th goes from just the greatest thing that ever happened to it's like sand in the hourglass. It's ripping through.
Okay, so what movie?
Yeah.
What was that a reference from? What movie is that?
That was reference to Wag the Dog, which are Dustin Hoffman and I believe Warren Beatty movie that discussed the America starting a foreign war in order to just kind of distract from some domestic problems, some domestic issues that they were having at home. So it's quite a good movie. It's worth checking out.
All right, a 1997 film. I'll have to check it out. Not that old.
You've
Uh,
literally never heard.
no, never. Okay,
I'm 107 years old and you're 12. But anyway, it's continuing on. Yes, it's we've got another international distraction, and it's a good one. If you wanted to stop talking about tariffs, this is one hell of a thing to put out of the headlines. And so America has its obsessions, but it's also a reason to sell stocks. When oil goes up 20%, We're going to get into how much to worry about crude and other data, but it's cause for pause.
All right, let's get wonky here. This is a screenshot. If you don't know what this is, if you've never actually looked at the CPI report from the Bureau of Labor Statistics, or not the Bureau of Labor Statistics, the
it's from Census.
Thank you.
The good people, the Census. Census.org is where you get your retail data.
Yeah, brain fart there. This is a screenshot. This is what the CPI report actually looks like, right? And so, what's highlighted here? What do you care about?
Fast and dirty. This is one of those things that they chuck on, and you never know with any type of media kind of what you should look at. This is how I'm reading this type of data when it hits, whether or not it matters. I'm looking for a few different things, but I highlighted them here. Number one, did we see furniture reverse? That would be a good sign that economic data has at least stabilized a little bit. As a sub-rider, a lot of those furniture-dependent companies that are reliant on people investing in their homes, making those large capital investments that haven't been good for years. They posted a really nice number earlier in the year, and it was kind of the question was, okay, is this an actual turnaround? The answer is no. Nope. Didn't learn anything there. The number two is we're looking for clothing and apparel to see just how big the pull forward was from April as people were hoarding. Again, the answer is the economy is kind of what we thought it was. There was some pull forward. It wasn't enormous. I wanted to pull something else out though. Miscellaneous store retailers, which can be read as kind of gift shops, a lot of cheap stuff that you would import. You can see a nice big spread, 7.5%. That's on number 3 versus 2.9 this month. That represents a pretty big drop lower. That doesn't necessarily bode all that well for a lot of the stores. We talked a couple of weeks ago, Spencer, about that one of the baskets of stocks that are working were people importing cheap crap from China. They've had a huge year, Five Below being one of them. They've priced in really the tariff kind of ending it as well as it possibly can. Five Below brought in new management. They managed it really well, but they didn't solve the problem of at least 90% of their products come from China. And so you saw a lot of people kind of hoarding these cheap goods as they went. Sales were much better than expected. Those stocks have ripped. We'll get to that as well in a point. But, it's anything I learned from this was that the pull forward in tchotchkes was a big deal. Otherwise, the economy continues just to kind of slowly recover. And so what you needed to see from this retail report, the only reason it was worth paying attention to, did consumers really panic? Because everybody said, remember, they told everyone, every freaking opinion taker that showed up at the door was met with a hail of, oh my God, I've never been this worried about the economy. The apocalypse is nigh. I've forgotten every economic thing that ever happened to us, and we're all going to die. And then they went to Costco.
I have two questions here. Maybe this is my short-term memory. I'm trying to remember, why were these numbers so high last year? Why were these
last year or last year over year, or quarter over quarter?
No,
month over month.
Like from May of 24. Why were these numbers so high? Do you remember?
It was just a problem. It was we were going into, there was a Japanese trade disconnection, and I believe it was inflation related. And at that point, it was, are we really getting product, or is this incipient reflation because we've been fighting that war?
So here's the way I would look. Here's the way I would look at this. So you have, like, for example, furniture in May of 24, furniture prices were up almost 9% year over year, and then a year fast forward to this year, and they're up.
That reflects the absolute shit show that is 23 as well. So
okay, so I guess but so then my point is, though, prices are still going up, right? Furniture prices are still going up, right? Clothing going up, miscellaneous tchotchkes, as you call them, going up. It's not like motor vehicle prices, for example, which are going
right.
down,
and look at here. So you see food. For instance, right? That would be a spot where you wouldn't expect Chinese inflation necessarily hit so hard. You can see that there, that the retail food services, they totally excluded. Anyway, you got 0.9% versus 3.3. So last year you had a lot of inflation built in just kind of food purchases of all sorts, whether you're at restaurants or kitchens or going out to eat in any type of form was much more expensive. This year that inflation's cooled off a little bit. Say what you will about what's going on with the rest of the economy. We're not really worried about foodflation anymore. People, that tends to be a number that doesn't move a lot because it takes them a lot to kind of change their spending on their food budget every month. So you wouldn't expect a huge change in that number without inflation, and you didn't see it.
I don't know. So I hear your point of what you're saying about how there wasn't a crazy pull forward, but clearly prices are rising in consumer land for not food and not cars, but for retailers, right? Prices are going up.
They're going to get baked in. Yep, they're inching right now. And again, it comes down to that reprieve was a big deal, and so you saw a little bit of a bump right away, and you saw it distributed throughout the chain. They don't have to really pull up the price on, say, specifically a T-shirt. If you're Walmart, and I've been going through the Walmarts lately and looking at all the places they're made, it's the prices are for sure going to go up, but they've been able to kind of spread that throughout the rest of the store at this point. And but it hasn't gotten to the point now, depending on what happens July 9th, or whether or not we're going to have to raise prices in a way that's going to be meaningful. You're going to have to take that $4 T-shirt to $6. That hasn't happened yet. And so we're not seeing it. Prices are creeping up anecdotally for the most part, but not necessarily at the rate that we thought about before. Remember, we're not talking about eggs anymore. We're more concerned about price of gas. Both problems, but it's a different matter.
Speaking of gas, can we just talk about oil for a second in light of what happened over the weekend? Obviously, oil markets reacting dramatically as they typically do, right? Does that register for you? Because we know your laser focus is the retail and the consumer space. Do you care about oil? What it's doing right now?
I care about oil less than some others do. You're going to get a lag of a few weeks anyway. It's before that's going to start hitting the pump. It depends on how long it sticks. Generally speaking, as a great rule of thumb, is to fade the exogenous variable risk. So 2011 brought that up. That was an incredible time to buy. Oh my God, the U.S. has been downgraded. Our debt's never going to be the same again. We figured out how to get more debt. This is also nothing but an exogenous shock. Now, again, can it go completely pear-shaped and get much worse? For sure it can. But if they don't close the Strait of Hormuz, this is not going to be an incident that America, at least from an economic perspective, is going to be talking about in a month.
All right. That's good to know.
Yeah, well, I mean, it's fade. It's just betting on America usually wins. It always seems like the freaking middle's fading and it's eroding and we're all going to die. That seldom turns out to be what happens. And so I've just, it's what I'm doing is playing the game that they've given us. Some of these stocks have reacted really poorly. It became in this risk on environment. A lot of the companies facing risk in the middle of a turnaround. They've gotten pull acts. It's going to be a long summer for them, but that's decreased the pool of winners. And we can focus on a few different categories of names that people can get long and be a little more chill over the course of the summer.
All right, let's talk about a few themes then that are sort of on your mind right now. First one you've got is Starbucks. This has been on the struggle bus for quite a while. If you go back all the way to, how far back do you got to go? You got to go back 4 or 5 years.
No, you can go back multiple years for Starbucks, and they've been eroding from inside. This was a favorite short. They never really worked all that well as a short, except for a few different trades. But it's been a while since Starbucks has been a growth company, or at least that they've had options. What excites me here are a couple different things. They compared them earlier in the column I wrote yesterday to Nike, where a similar list of problems. A lot of China exposure. Starbucks has just tons of units over there. They haven't grown for years. They've spent billions of dollars. China, under Nickel's plan to kind of fix everything, Starbucks has made mutterings anyway that they're going to get out of that market altogether. That would be an enormous catalyst for Starbucks. If they can just focus on domestic stores, that's going to be a huge catalyst. I like the way the stock's setting up. It's right under its 200-day, which makes it a nice, easy trade, depending on how much cushion you want to give, how much respect you want to give to that technical indicator. again, I'm not that crazy about it, but I think this thing hits 101 and actually closes there convincingly. It's going to be 110 really fast because it's just going to have a good story. They're going to have a real, it's the easiest fix you can imagine for China. We sold half of our stake to Luckin. We let Chinese buy half these things. That eliminates a huge money suck for Starbucks for the last 3 decades. And you have more proof that Howard Schultz is changing the place.
I mean, if you look at if you really zoom out on this thing and look at the monthly, it's really been stuck in this range from I guess 50 was the COVID low, right? And then 126 was that post-COVID high. So it's really been stuck there for 5 years. At this point,
and they've had basically the same problem.
Say 5.5 years, 6 years.
It's the CEO is Obi-Wan Kenobi. He was just kind of this disembodied Howard Schultz who would stand there in a robe and tell people how to do things for real, and just force them to do it. And it was the same problem all along. Starbucks was forgetting the customer. They were forgetting how to relate to people and just getting lost in a bunch of crap the way Target does now, for instance, with, it's all of a sudden all you hear about are the baristas forming unions. And whether or not you can use your bathroom. If you're in the business of serving coffee and the national conversation is just revolving around your toilets and whether or not your hippie baristas are being sent to college for free, you got to get your act together. Starbucks has gotten its act together. They're focused on the right things in their stores. And one of the problems that's most intractable is China. I see that as just they're wasting billions of dollars a year there. My double-horned thesis on Starbucks isn't enormously controversial. China's the hard part. If they can fix China, that's great. If they can make it slightly more appealing than a methadone clinic, that's fantastic. And I think Starbucks is already just inch right up, just right over the lending library level of customer satisfaction in terms of how much of it, and it's just below now the DMV to go get your Starbucks. As they continue to mount over these American pastimes, the post office is next. If going to the Starbucks is more fun than the post office, I think that'll be good for a couple bucks.
I mean, let's not forget also Starbucks has been around for quite a while. They've gone through transformations previously. I listened to a interview with Howard Schultz years ago, and he was lamenting how, I guess back in the 90s, they had gone all in on breakfast food and sandwiches, and he walked into a Starbucks one day and it reeked of eggs and bacon. He was like, "This is bad, right? I can't have my coffee."
And what's hilarious about that?
Eggs and bacon, right? So
he had
all that.
He had 2 white whales that Howard Schultz chased to his grave because he figured he could do coffee so he could do everything else. They had this amazing plan to go to China, and they were going to titrate the Chinese into caffeine. The long-term plan was to teach the Chinese to be much, much more caffeinated. And one of their arguments was tea has 1/6 of the caffeine of our venti. And so once we walk them up, we can charge them so much more just to enjoy that sweet, sweet American speed, just to slap it in a vein. And holy crap, you think you're productive now. And that didn't work out. And the other was food. And so Howard did go in and he smelled the eggs and he thought that was terrible. And so he replaced it with croissant. I mean, they've done food poorly for 35 years. Right. Nickel came in and he said, "You know what? We should serve coffee in less than 4 minutes because we're kind of a coffee place." And it's been a night and day improvement. It just simplified the menu the same way he did. And the stock got killed. You can see 75 was that low. That was when Nickel announced that he was actually going to stick with baristas instead of this magic plan they had to cut workers by just immediately eliminating them with coffee machines. And what these machines would in part do was make the electric kind of red grenadine drinks. And again, America's going there to get drugged up, Spencer. They want it fast. They want it clean. And Starbucks was spending billions of dollars on the workflow to make you a better grenadine foamy that you could put on Instagram. That's never going to be the core customer for Starbucks at 7 a.m.
Yeah. All right, let's move on here. Enough about Starbucks. This is a fun chart of some of these recent high flyers in your world. Build-A-Bear, which had its best day ever a couple weeks back. Urban Outfitters, Aritzia. I am not really understanding what all these have in common, other than the fact that they're at all-time highs. Is that the theme here?
That's precisely what they have in common. Is that they're knocking on that door we talked about. You have to believe in these companies more. You have to pay more for them than you did before. Now these are, and I picked 3. They've got different things going on, but they all have outperformed insanely. These have been three of my favorite companies when we reported, did report cards on earnings. Aritzia, Urban Outfitters, Build-A-Bear, they were the three top picks, and they're right below all-time highs. That's not a coincidence. Now, if they can punch through there, again, you get back to that Starbucks chart, where is it the best chart in the history of the world? Nope. But does it set up a nice risk reward for you? Oh, yeah. You know what I like buying are stocks at all-time highs, because they tend to make new all-time highs. And so, but that's pretty sticky resistance. And so I just couldn't help but notice these are three relatively obscure stocks. Again, the holy triumvirate of stock picking. You need the technicals, the financials, and the story to all line up. And these things have two of those. And if you can get to the all-time highs, if you can stop this drawing one big, thick, fat line and saying people are going to sell the all-time highs, you've got at least three of these that can rally just because they outperform on such a great relative basis.
And what about this last theme you're looking at, Five Below and Elf? Forgive me for asking, but what's happening on July 9th?
That's when the 90 days expires. Remember Liberation Day, and we were going to end the war, and that lasted for 2 days, and you said, we got a 90-day delay. Yeah, it's not on everyone's radar yet, but it's going to be. We've extended it and twisted it and morphed it in various ways, but that still is kind of when the window closes. And Five Below, I am familiar with management there and talked to them about it. They did a terrific job, Spencer. It's this woman who came in and runs the place. She really did a lot of the heavy lifting, turned around, but you just can't escape the fact that whether it's through their vendors or through their own purchases, about 90% of the stuff in a Five Below comes from China. And so their margins are going to get impacted one way or the other. They've priced in about 20%. They've been clever with this pause that they've had. They've got, you can order a lot of the Halloween crap for $5 less if you're not paying the tariffs now, or the huge ones anyway. But they didn't really solve the problem. And so you still have a doomsday scenario. What these both are, it's one's a makeup company, one's just kind of a cheap crap from China company, but they're your binary bets for how things turn out on the night. These are the things that if the tariffs, if things go south with China, if the kerfuffle in the Middle East doesn't last long enough to keep it out of the headlines, and it turns out that we decide to go back to 100% tariffs, these stocks have a long way to fall. These are over 70% from those April 7th lows and screaming higher. You want to flip a coin this summer and just you feel lucky, punk? Take a shot at some of these screamers. They've got the most to lose, because kind of on a fundamental level, that's still the boogeyman, right? That's still like worst case scenario. We freeze all the supply chains all over the world and things get ugly.
And the chat is pointing out, Ulta, same idea, right? Ulta had that gap up on its earnings, right? So, and
the makeup's done better than expected. The Chinese sales came in well for a lot of different companies, and that should have been good. But again, you're not going to get just these catalysts. You're paying more for these companies on a PE basis than you were before. So China retail sales were better than expected, and that helped us stay longer. That helped Ulta. These makeup companies absolutely destroyed over the last year. So they have room for improvement. If Ulta triples from here, it'll be at all-time highs. But or not Ulta, rather Elf. And there are also companies with other problems. It's in terms of where their sourcing is, Elf is going to be much more exposed than Ulta. It's a classic sort of people wear makeup even in bad economic times type of play as a rule of thumb. I don't think the economic times are all that bad, except for ways that we're causing. But it's sometimes stocks just run too fast, and at 100% off the highs on a decent trailing quarter isn't enough in this environment.
All right, Jeff, you're going on vacation in a couple of days. You're going on one of those fancy schmancy Alaskan cruises. So what?
Old people, right?
It's what is your plan for this vacation here?
Same plan for every vacation. You sell down until you're not just going to be inspired to do crazy crap. I want to be at least unexposed enough to daily fluctuations that if I see we're down 5%, I'm not just going to spend any time on my phone. That's kind of true for everybody, but it's particularly true in kind of that mediocre. I don't want to be the guy in the quicksand with my hands sticking up, mutely reaching for air in the market quagmire right now. And so just kind of limit the risk on some of the long shots and make sure that you're in kind of a mindset where you enjoy the vacation and get ready for the back end of the quarter. So I'm taking a couple weeks off. I think people are in pretty good hands. Obviously things could go, completely south in the meantime, but this isn't the time to raise a coin. That's true pretty much every summer in Wall Streetville. This summer in particular, it's time to just kind of reduce risk and get ready for it in July and August.
All right. Jeff, I will look forward to whatever due diligence you're doing on your vacation. I know you never stop with the observing and the watching of the people and the
It's the
shopping and the
best
buying.
excuse to hang out at fancy
So,
schmancy places, Spencer. I bet Ralph Lauren's probably doing well on the cruise line, but I don't know. I've never been on a fancy cruise. So it'll be fun. It'll be great to go to Alaska. There's like 3 hours of night. So the sun sets like at midnight and comes up at like 4 in the morning, which is perfect for me because I don't sleep all that much. So this is ideal. I think I might never come back. I might be coming from a log cabin next time we get there.
all right, we'll see. Well, in any case, Jeff is going out of town, but he will still be posting and doing some stuff and doing some research. If you want to get Jeff's free note, the link to that, as well as his paid research and his portfolio, what he actually owns, what he wants to buy, what he's hoping to buy, what he has previously bought and sold. All those things are in the Macke Retail Roundup. Both those links are in the description below on YouTube. Get them. And if you like this kind of stuff, because again, we always say the consumer is the economy. Consumer spending drives the economy, and this is sort of the thing behind that. So that's why we do this, because it's important, and that's why we do these videos. So, Jeff, any final thoughts for us before I let you head on over to Alaska?
Yeah, it's been a kind of crazy first half, man. And I think it'll be okay. Where you dealt a little profit in the first half, I'll be here to wrap up kind of Q2 when I get back, and we'll launch into some good trade ideas and just kind of control our risk, make a little cash where we can in this back half.
All right, we'll see you. We'll see you. I'll see you in a few weeks, I guess. And
I'll be back before the 4th. We'll celebrate America together, Spencer.
perfect. Make sure you're back before Prime Day, okay?
Oh
Which I
my gosh,
hear.
it's summer Christmas, which you just heard in breaking news. Break the news, Spencer. Tell people
Yeah,
you've been invited to
Prime
Prime Day.
Day. I got a notification like a half hour ago. Prime Days. It's like 3 days this year, which is crazy. What I
It's
say
summer
was
Christmas. It started as summer Christmas, and apparently that crazy SOB is going to turn it into summer Hanukkah.
it's
It's just
July
kind of a
8th.
combination. It's 3 days of magic for every man, woman, and
It's
child
the
in this
8th through
country.
the 11th. This is crazy. This is madness. We got to have you back to talk about that, because it's going to be wild.
Absolutely, it's one of my favorite things. The fact that Amazon invented a whole brand new holiday is just awesome. It's Jeff Bezos' gift to humanity for the rest of time.
All right.
As opposed to Katy Perry rocket ships. It's even bigger than that.
That's right. All right. Thanks for watching, guys. Drop us a like, and we'll see you around.